So it seems the trend is continuing with Warren Buffett. And in today's video, I want to look at what he's doing and the moves that he's making, because this could affect a lot of stocks, a lot of ETFs, and a lot of the markets. Now, when we think of Warren Buffett and Berkshire Hathaway, it has sold all of the holdings that it has in our S&P 500 fund. So we're talking about the State Street, we're talking about the Vanguard. He has eliminated all positions in the latest retreat from the stock market, and it seems like they're pulling back. Now, a lot of people are saying he might know something that we don't, or insider information. It seems like the Oracle of Omaha has always had the upper hand when it comes to investing, posting over double-digit returns for an incredible amount of time. Now, when we start looking at the conglomerate, Berkshire Hathaway, they have dissolved shares in two big exchange-traded funds, which, of course, Vanguard, State Street, Global Advisor, the S&P 500 funds. Now, if you think back, when Warren Buffett was interviewed years ago, he had talked about that every American needs to hold the S&P 500. Now, when we think of ETFs, if you're unfamiliar, exchange traded funds are a collection of stocks or bonds or a combination of both that track a single index, just like that S&P 500. Now, for me personally, I do own the VOO, which is that Vanguard S&P 500 that Warren Buffett just sold out of. Now, when we start looking at that S&P 500, it is the 500 largest companies in the United States. Each of the Berkshire Hathaway's ETF holdings were roughly $22 million, according to the Financial Times, that have been completely liquidated at this point. Now, that leaves the question, what does the 94-year-old Warren Buffett want to do with no ETF holdings at all, despite in the past talking and really selling ETFs as one of the most wealthiest and really most predominant investors that we see? When we think back to 2016, Buffett said he recommended low-cost index funds, preferring them over hedge funds in really for everybody. Trillions of dollars managed by Wall Street, charging higher fees, reaping outsized profits, not the clients that it goes to. And in that same letter, he also hailed Vanguard's John Bogle for the person who has done the most for American investors with the Vanguard ETFs that he has created. Now, we know Berkshire Hathaway has been hoarding a crazy amount of cash in the amount of $334.2 billion, and he has finally placed that cash. Now, some of the investors were really concerned that cash hoarding was the retreat from the stock market and seeing it kind of overvalued, or looking at an impending crash that is coming. And if you're familiar with the last 5 days, we have seen a little bit of a falter and a little bit of crash. Now, of course, a lot of concerns around Donald Trump, President Trump's tariff plans and what is going to be going next month. And he thinks that and really the S&P 500 has a few stocks that are way overpriced, way expensive. And of course, some of those he also did hold. When we think about Apple, he was a majority holder or large holder in Apple itself, which again, a lot of people to think that it is overexpensive for technology doesn't make sense when he holds it. Now, when we looked at his annual letter that came out a little bit earlier this month, he really, the preference won't change is what he said for the extraordinary cash position that they hold at Berkshire Hathaway, because the majority of the money still remains in equity. But again, despite dumping all of those S&P 500 funds, they still hold a lot of individual stocks. Now, when we think of the two biggest holdings that he has, Bank of America and Apple, he has significantly sold off. Now, he's not out in its entirety, but has significantly sold off a majority of those. And then in the surprise move, which was in the letter in 2024, he increased his holdings in Japanese trading houses, so sending those stocks surging. So it seems like, again, pulling a lot of cash, pulling back out a lot of US ETFs, a lot of the US market, and putting it into the Japanese trading houses, which of course made a lot of those really spike up. And also seeing the StockX in Europe 600 really doing incredibly well, up over 5% this year. European stocks are definitely outpacing that we're seeing in the US. Now, of course, when we start looking at this and thinking of back to 2019, so a little bit later, he capped Berkshire Hathaway's holding at 10%. He wanted to keep the stake in the foreign investing below that 10% mark. But in the last letter that we just received February 22nd, he announced that he has agreed to moderately relax the limit of that 10%, which we don't know exactly what that means until we get a new report showing everything that he is going to be invested in. But that could mean 12, 15, 20, 25. We don't know exactly what he means when he says moderately relaxed the holdings in there. And he also noted that the companies he is investing in were very successfully operated in a manner that is very similar to how Berkshire Hathaway itself is being run. Now, since Buffett's initial investment in these companies, they have outperformed the Japanese markets. The Nikkei 225 is the top 225 blue chip companies. So thinking on the global market is very similar to what we see with that S&P 500. And it is really is proof in the trading in the company sector that the company will do incredibly well. Now, interesting to see again that we've seen such a move going from where we are with the S&P 500. And again, thinking of the last couple of days, even on the year, the S&P 500 is still up. And I want to take a look at it. So let's hop over and see exactly what is going on with the S&P 500. Now, interesting enough, like I said, over the last couple of days, it still has been down a little bit, but not quite as much as we have seen kind of in the past. So thinking of the S&P index itself, and let me go ahead and pull this up so we can take a look at it. But thinking of the S&P 500 itself, it has seen a little bit of a dip over the last couple of days, and it has been a combination of a couple different things. And I want to show you exactly what we're talking about. So the S&P 500, you can see down 1.5% today. But looking in the past 5 days, we're down 4%. Even the last month, 2.51%. Now, this is due to a combination. When we even look year to date, we are now negative. We were up about 1%, but with the dip that we've seen today, it has dipped below being positive year to date. So far in 2025, the S&P 500 is negative at this point. Now, like we were saying, though, when it comes to a multitude of factors and really some of the concerns that we're seeing that I did want to talk about, we did want to share here. Number one, the largest one being when it comes to Trump, when it comes to the tariffs, what is it going to look like on the global markets? What is it going to look like in the US markets for US companies? That is yet to be seen. Now, the tariffs are supposed to go back in place in early March, which if we're tariffing Canada and Mexico and China is also getting an increased tariff. What exactly is that going to look like in the markets? Now, of course, with everything that Doge has been doing, the unemployment numbers have spiked significantly as well, which having people that are out of work, of course, not very prudent to the American economy, because if you don't have a job, you don't have any money. If you don't have any money, you can't buy the things that you need. That could be an increase in delinquencies when it comes to credit cards, when it comes to mortgages, when it comes to auto loans. Overall, it could offset a lot of things depending on where it really lands and where we kind of end up. Now, we also know NVIDIA posted good numbers today. They were pretty solid, even though it took a really big dip. We've seen a dip in the crypto market, looking up here, even at Bitcoin, looking at Ethereum. And then, of course, Apple and a couple of the other very, very heavy tech stocks have started to see a little bit of pullback as well, just from what is going on in the media. Now, guys, the big thing to take away from this is though, even though Warren Buffett has pulled out of some of the US market, it has always been very, very strong. And he still is invested in a lot of different stocks in the US market itself. Now, also to take away from this is now you're buying it discounted. When we think to 2022, when we've seen a significant downturn in the market, it was on sale. When you think about purchasing and buying things, it is very imperative when we see a down market, and we've always said when there's blood in the streets, buy even if the blood is yours, meaning if the market is going to the red, you are buying it at a discounted rate. I did this back in 2022, and overall with that discounted rate, we actually seen about a 20% decline in the market, which was huge. It meant I was buying everything that I had, and all the money I put in the market was at a 20% discount. Now, of course, when you think about discounts, the deeper the discount, the more you should be buying, essentially, especially when it comes to the stock market, because it can be very imperative when it comes to the ability to make money when the stock market does rebound. Now, overall, guys, like I said, making sure that you do have the ability and really keeping some cash on the sideline makes a big difference. When you think of Warren Buffett, when you think of the philosophy, there's no time that he is totally 100%. He looks for the value, he looks for the dip, he looks for, and I believe within the next probably year or two, a lot of the money that is going offshore that he's putting out to the international markets are going to be coming back to the US markets. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.